Hey, good morning, everybody. Welcome to the first full week of 2020, first full week of the decade, and the start of the third decade of this century. So, hey, a lot going on today as we start the first full week. Glad you were able to join us today. I hope that you had a great weekend, and I'm looking forward to Dave and I bantering back and forth to see what's happening in the marketplace today. And I'm looking forward to that. I hope you'll hang in there and join with us as we continue to see what's happening out there today. Dave will be with us here in just a moment.
Oh, 5.7 Light FM. As Nico and Vince, good morning. We're at 8:39 here. It's 21 before 9. Check in on your money and see what the Sam Hill's going on today with your money up on Wall Street. Doesn't matter what you do with your money, even if it's just in passbook savings. This junk we talk about every morning affects you and your retirement. Let's head downtown to the offices of Statler Financial Services, where Phillip Statler's standing by. Phillip, good morning. How was your weekend?
Good morning, Dave. Hey, I had a great weekend. It was beautiful weather, so it was a nice weekend. I really enjoyed it. A little chilly this morning when I got up and got out, but other than that, it was a great weekend.
It was for me as well, and I'm glad to hear yours was as well. Was not a good Saturday or Friday on Wall Street. That's for doggone sure, and it looks like the trend's continuing. We were down 233 points on the Dow. Nasdaq was down 71 and a half. Standard & Poor's was down 23, and all of that was issues related to worry over what's going on with Iran, and nothing changed over the weekend. We're still throwing brickbats at each other and still making threats, and we're still down, and it looks like just a continuation of Friday going on, doesn't it?
Well, it really does, Dave. On top of that, I think the rhetoric's gotten a little bit deeper in terms of Trump. I like this threat. He threatens to slap sanctions on Iraq like they've never seen before. So, pretty strong words.
Yeah, but well, if they throw us out, the ultimate sanction is leaving them to the fruitcakes that are fighting over territory in Iraq. I don't even think we need sanctions because Iraq won't be there if we leave.
Well, that's true, and I think they forget what we've done for them.
Yeah, it's becoming more and more of a mess. So far, it's a mess rhetorically, and we're all waiting to see what Iran's going to end up doing. One thing that I did find at least minor league hopeful anyway, Iran has been saying, we're only going to hit military targets for our revenge, which is small comfort, but they seem to at the very least be ruling out the notion of terrorist attacks a la what we've experienced in the past. I won't say I'm optimistic because I hate anybody getting attacked, but it looks like at the very least we can keep our eyes open at military installations primarily, right?
And you believe them? I mean,
No.
Dave, really? Come on now.
No, I don't believe a thing they say, but I think probably Trump's threat to hit their cultural sites and non-military sites might very well, at the very least, encourage them to enlighten self-interest to try to throw a bunch of missiles at military installations, which they've done, by the way, over the weekend.
Yeah. It's just we'll have to wait and see. It's one of those things that puts you on the edge of your seat again.
Absolutely. There's no two ways about it. The situation is El Stinko, regardless of whether or not you think the decision to take out that guy was a good one or not. Net situation, even if we're prepared for it, is not going to be pleasant. Starting out the morning, as far as news affecting money other than the geopolitical politics, we had a couple of reports that came out after we quit on Friday. And one of them was good, one of them not so good, I gather.
Yeah, it was. We had construction spending came out Friday after you and I talked, and it was a little better than expected. They expected it to be up 0.4%. It was actually up 0.6%. So a good sign for the construction industry. But on the other side, the manufacturing industry, not so good. They were expected to have the number was expected to be like 49. It came in at 47.2. As a percentage, that means they missed by about a little over 3.5%. So, it's just one of those things that you and I have continued to see manufacturing numbers decline here as well as in Europe. And so, just worse than expected.
Is that one of those indexes where under 50 means contraction, or is it an absolute number?
I don't know. I didn't see kind of what that really means
That's,
in terms of that.
so many formulas go into those indexes. It's confusing. So, I mean, the delta change from one month to the next is significant, but I've never completely figured out what all of the indexes mean, and I've never quite found the time to research the absolute meaning of each of the index numbers as to how they work. Start out the morning with some bad news for one of the big companies in the country. Ford says that their vehicle sales really kind of soft, and when you drill down the numbers a little farther, it's even worse. 1.3% decline in unit sales from 2019 to 2018. But drilling down, trucks were up by about 15%, but they said their automobile unit sales last quarter were down by like 41%. That's got to be a sea change for any manufacturer.
Well, here's the deal when you think about Ford, okay, is that Ford is getting out of the car business, and they're just going to be manufacturing after this year, just going to be doing SUVs and trucks. That's it. There's not going to be a single car on their lot. And so I think that 41% decline is probably just indicative of their change in strategies.
Understood. GM did something pretty darn similar to that some time ago. Cut back about 75% of their models of sedans and coupes, and said, "Okay, fine, we're going to do SUVs and trucks." All I can think of is the last time American automotive manufacturers did something like that and said, "We're all in on these big vehicles." We had a gas crisis, and everybody started looking for small, energy-efficient cars. And hello, Toyota, Nissan, and Kia, right?
Well, that's true, but here's the deal, Dave, is that they've come out with those small SUVs to compete with those guys. So they don't just have the gas guzzlers; they also have the smaller, economic, hybrid type of SUVs also in the smaller line that they've developed.
They are slightly more prepared than they were the last time, anyway. But still, I still wax suspicious over the notion of that being a good strategy to get out of an entire segment that just because it's off right now. I wonder whether it's going to come back and catch somebody with their underwear around their ankles in Detroit.
Hey, that's always a good possibility.
That always concerns me a little bit when I see that. But boy, it's not good news one way or the other. The other
No.
big company that hits is Boeing, and they've got more things to make their life interesting out in Seattle, don't they?
Yeah, they really do. Poor Boeing. It's they then within an internal audit uncovered some issues with the electronic wiring that controls the jet's tail wing. And this is again in the 737 Max. So the poor 737 Max is just having issue after issue. It makes you wonder if it's going to be around much longer.
They just got to redo that plane and rename it, because I don't think anybody's going to buy 737 Maxes, even if they do fix all the issues. Just become snake bit.
Well, I agree. I think that it's got a bad taste in most people's mouth, and they're just not going to be looking at the 737 Max as a plane they want to get on.
Yeah, even somebody that's generally got a lot of faith in the airline industry, I'd look askance at it. And I'm generally one of those cavalier people that says, "Oh, I trust him," which may not be smart, but at very least, it's generally a healthy attitude. But this time,
Yeah.
I think I might even look at which
And
which
it's
kind of plane
still,
my flight is using.
as I say, it's hurting their stock this morning. It's down 1.1% after closing down about 0.25% Friday. So, they're still hovering around their 52-week low. Their 52-week low was $320. They're at 329 right now.
Welcome to a new sequel to Sleepless in Seattle, the Boeing boardroom, right?
That's right. Exactly.
That's it. Hey, we had one thing. We talked about potatoes on Friday. Today we got eggs as far as individual company reports are out.
We do. We have Cal-Maine Foods, which they are the nation's largest egg producer. So we go from potatoes on Friday to eggs today on Monday. They were expected to make 3 cents a share profit, and instead they lost 21 cents a share to the negative. So a big miss on earnings per share, a miss also on revenue. They're just saying it's a challenging market right now when it comes to egg production. They're down 9.3% this morning.
I wonder what on earth it is that eggs makes are so different. After potatoes, that's such a good one. I would expect food products in general to be up. That's kind of two sides of the same coin, isn't it?
Yeah, you got to wonder what the issue is there.
Yeah, that kind of make you head scratcher. Setting the table again this morning. Negative day on Wall Street on Friday. Largely fallout from the Iran crisis, and we're still where we're at there. 233 down on the Dow, 71.5 on the Nasdaq. Standard & Poor's down 23. Everything was down over 0.75% on Friday. 45 minutes before we open, Phillip, how red does it look this morning?
Hey, it's still pretty red, Dave, but it has improved since I got up this morning. Right now, we've got the Dow down about 65 basis points, down $182. We've got the S&P 500 down about 0.6, which is a little over $19, and we've got the Nasdaq down 0.75% now, down to about $64. So everything is heading down. We got the VIX up almost 5% this morning, a pretty big jump on them. And then on the commodities side, we've got gold pressing probably a 6-year high, up 1.5%, which is $23 an ounce, up to $15.75. We got silver up 1.6% to $18.40 an ounce. And then we've got crude oil up 1.2% to $64 a barrel.
That's not what we want to hear on that, but it's not a surprise. I've noticed that the bond market is sure showing a little bit of jitteries as well on equities. It's down to 1.79 on the 10-year Treasury notes this morning, but that's doggone near 20 basis points since from Thursday. We're definitely flying to safety with the serious money, aren't we?
Yeah, it does seem to be that we are making a little bit of trend back towards safety, and so this number has fluctuated this morning. It was green for a little while. It's red now. So we continue to watch that.
I hear you. Overseas markets, everything red. No surprise to that. Asia and Europe, everybody's trading downward this morning following our tumbles. Phillip, this is one of those times in which stability in a retirement account means an awful lot. We talk about that you never know what's going to cause the big tumble because we're overdue for one. Good to be appraised and know how much risk you got in your portfolio. How do you find you to get a hold of it?
Give me a call at 863-382-0037 to schedule your no obligation financial x-ray, where we will x-ray your current portfolio to determine how much risk you have, how much you're paying in cost and fees, and we'll measure that up with your risk tolerance to make sure you've got the right amount of risk in your current portfolio. Hey, follow us online at statlerfinancial.com and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 7:30 a.m. And if you can't catch it on the radio, you can stream it live, can't you?
Absolutely. NewsTalk730am.com. We're there 24/7. Ditto here, by the way, and we'll do it tomorrow morning here on Light. Fair enough?
Fair enough, buddy. You have a great day. I look forward to tomorrow.
Thank you, Phillip. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. You know, it is the beginning of the year. It's a great opportunity to take a look at your current portfolio to make sure that it's going to line up with what you need it to do over the next few years. And the big thing is, especially if you're 5 years out from retirement or you're already retired, you can't afford a big hit when it comes to risk. Give us a call. Let us go through our financial x-ray to determine how much risk you have in your current portfolio. Just give us a call, 382-0037. Have a great day. I look forward to speaking to you again tomorrow.